guess the best way to describe what we've been going through with respect to interest rates in Canada is a roller coaster ride. We saw the roller coaster going up, up, up for quite some time. And over a year and a half, 25 basis point hike, 50 basis point increases, one after the next, 10 times we saw interest rates go higher in a very short period of time, only to be followed by a very small period of time where Bank of Canada didn't do much at all. They stood pat with where they were at, interest rates at high points, being very restrictive to hopefully bring down the inflation rate. Well, here we are now. Inflation is actually well below 2%. Our last reading at 1.6% here in Canada has now really changed the focus. Changed the focus from the Bank of Canada in terms of slowing, cutting rates on a slow and steady basis to speeding up the rate cuts. I've heard many people talk recently about, so we saw a 50 basis point cut recently, perhaps followed by two more 50 basis point cuts in the coming meetings. And, I'm just not sure what's going on. All we hear about is that the economy is doing well and that GDP, a last reading, in around 2%, although we all know that it's probably closer to 1% on a per capita basis. A lot of the spending that has been happening has been because of all the immigration all the people we brought into Canada spending money, which is obviously helps GDP. But on a per capita basis, we're just hovering around 1%, just above the flat line. So not doing as well as maybe some of the numbers have indicated. And also, when you factor out government spend, we're definitely not doing as well as the numbers are indicating. But we're still okay, right? We're not in a recession, a mild recession. But here we are, cutting interest rates recently 50 basis points. So we've had three rate cuts of 25 basis points each, followed by one of 50. 125 basis points or 1.25% cut off the rate. And so to me, the first question I have is the Bank of Canada know something we don't? I'd like to bring up a point. The Bank of Canada raises rates. They tell us that there's a lag after you raise rates. There's definitely a lag between raising them and the effects it has on the economy, yet they just seem to raise at every meeting, I guess, going against what they were saying, right? That takes 6, 9, 12 months to see an effect when you raise rates. So then why would they raise rates 10 times in a row? Great question. Only now to cut rates 4 times in a row. And the opposite effect, we know there's a lag to that as well. When you cut rates, you won't see the effects in the market for 6, 9, 12 months later. So why has the Bank of Canada been in such a hurry? Why have they taken us on this roller coaster ride? And to me, I think someone's got to call into question the credibility of the Bank of Canada. I'm just not sure they know what they're doing. I know now they're searching for that neutral rate, the rate that they want to set policy at and keep it at so that they're not stimulative for the markets, that inflation would rise again, but not too restrictive for the markets where we could see unemployment start to climb. So they're searching for this neutral rate. And in my opinion, I'm not so sure they know where that is. And it just seems like they want to get there in a hurry. We had a rocket ship on the way up with respect to interest rates. And it seems like we're falling pretty quick at interest rates right now. First couple of charts we have here, Bank of Canada cuts key rates by 50 basis points. This is a great chart because it shows three things. Interest rates going up over the last little while, this last couple of years, then flattening, as you can see in the middle, and then coming down to 3.75. You see inflation coming down from roughly June, July of 2022 all the way to present. You see the dotted line represents 2%, which is the Bank of Canada's target rate. We're now below that. But more importantly, GDP numbers, the purple at the bottom, you can see basically it's been flatlining. We've seen it perk up a little bit in January, in April, maybe a little bit in July. But for the most part, it's been relatively flat. Our next chart is more of a longer-term chart of rates. And you can see going back to 2017 how the rates have behaved. There you go. And again, you can see at the far right, the big discrepancy. The bank rate, Bank of Canada rate, 3.75%. Inflation rate, 1.6%. And, I know we're now well below the 2% target rate. But I think you have to take that a bit with a grain of salt because what we saw in the latest numbers, a lot of that decrease in inflation was due to gasoline prices coming down. I think it was something around the number of 10% reduction in gasoline prices. That's the major reason that we're seeing an inflation rate, the last reading of 1.6%. Food prices, for example, were actually up 2.5%. So gasoline prices made a big deal, and we know gasoline prices is very volatile. Gasoline prices go up next month. Perhaps we start to see inflation pick back up towards 2% again. Our last chart here, again, another way of showing the Bank of Canada. There it is. And I think this one really shows, if you take out all the other numbers, you see the flat line along the top there in the middle, and then how quickly rates are coming down, pretty much as quick as they went higher. And that is why I question the Bank of Canada and what they're doing. Maybe they need to go slower. Maybe they needed to go slower raising rates. Maybe they need to go slower and lowering rates now. It just seems like they're in a hurry to get to where they think they should be. And they're just not waiting for these interest rate movements to take effect in the economy. So I guess we'll have to see what happens at the next meeting, the last meeting for the year. Will they go another jumbo cut of 50 basis points? I'm hoping they don't. I'm hoping we see at the most 25 basis points. To me, it just tells makes the wrong statement for all those that are looking to borrow, to either invest, to buy a home, line of credit. Where is it going to save for our housing market if we continue with these jumbo rate decreases here in Canada? How hot will the spring housing market be? What about all those people that are looking to buy their first home? We have a problem with housing in this country. It's very expensive, especially in the big cities. Lowering interest rates as fast as we have been, in my opinion, it will not help that. We were finally starting to see housing prices come down a little bit more affordable. Yes, interest rates are high, so mortgage rates are high, but nonetheless, housing prices were coming down in certain areas. And I think, and I worry that if we continue to go as quickly to lower rates on the way down as we increase them on the way up, I just think that the Bank of Canada is asking for a pretty hot housing market. And I know that's something that Tiff Macklem does not want. So it'll be interesting to see what the Bank of Canada does at this meeting and the first couple of meetings in 2025, because I think it's going to have a major impact on the housing market.